Backed securities have had a really good run, and I think steam may have blown out of that one. It might be settling back into the channel. Now, we're not absolutely certain. We'll see how things trade out, but today is the 3rd of June. Not quite halfway through the year, but getting really freaking close. It's amazing how quick things have gone so far in 2025. What are we looking at today as far as all the stuff that's going on out there? So we've had the S&P US manufacturing PMI came out. That showed us a little bit hotter than what we were before. So a little bit more going on the manufacturing side on the US is concerned. The ISM index is showing that it's actually just following forecasts, which is up a bit from what it was previously. Construction spending, that's down. That's actually dropped a lot, comparatively speaking. So it's forecasted to be, so it was up 1%, forecasted to be up 2%, is actually down 0.4. So interesting. So we'll just see. Actually, let me rephrase that. It was previously down 0.8, then revised to up 0.1. Then it was forecast to be up 0.2 or 0.2%, basically. Now it's actually down 0.4. So that's a 0.6 swing in reality. So a lot more negative than it was anticipated as far as the construction spending is concerned. Factory orders, those came out this morning, in fact, and those are down. They were expected to go up 2%, be down 2%. They're down 3.7. So that's a significant drop. The prior reading, interestingly enough, it was 3.4%, but it was revised from a 4.3%. So that is a big swing downward comparatively. When you see that kind of a movement. The other thing that's interesting is the job openings. The jobs report came out, and we're showing a little bit up. So prior reading was revised. The initial reading was 7.192 million. It was revised to 7.2 million, and then it went up to 7.391 million. So jobs are being opened up. People are looking to try and expand their workforce. That's kind of a good thing. So when you're talking about what's happening there and what's going on in our markets, let's take a look at this information here. So we have seen some of the fastest growth in the stock market. We've seen a big jump in the stock market, quite a rally from where it bottomed out. So we've seen steep climb there. Again, it's an emotional place when you consider the markets. Very emotional drop when they started seeing the introduction of tariffs. Very emotional jump right back in, if you will, when you start considering what's happened with how people are accepting it. Let's go to 6-month view so you can see this climb back out. Really steep to climb out of there, and a lot of movement. So what I find interesting about this, I should compare that to our mortgage-backed securities, because we've only seen just in the last since beginning of May. Let's take a look here. Let's go for beginning of May. That's going to be right here. So we had, look at this upward swing since the beginning of May. That starts right here. And if I didn't have all this, so here we go, right there. That's the beginning part of May. All this upward swing. So stock market going up. So let's switch this to our bond market so we can kind of see what was going on there. That same window of time. So we've seen, if you get into the beginning parts of May, part of it kind of goes along with what's happening to stocks going up, bonds going down, right? Then it turns around, and as we're still seeing stocks go up, still seeing a rise, now you're seeing bonds rise at the same time. So since the 21st, we've seen it bottom out and come climbing back up. We've actually reached a point here where we peaked out above the point I thought it would peter. I thought it would actually break through here and then come back down into the channel. But what it did is it tried to break higher, and now it's pushing, but it's not going to make it. Every time it opens, it's going right back down. So this right here is acting like a pretty strong ceiling. This line here at 98.83. As you see, we're below that. That seemed to be very strong, pushing us back down. Now, we do have a moving average that's going to help us kind of stay above that and kind of get squeezed in here. But I think we might be going back down to that channel. We might be heading back down there, seeing interest rates go down. So, my opinion, this definitely, when you're at the top of these swings, and it looks like it's, if you look back in history, we've seen these parts where it comes up, Can't get any higher, comes down. Tries to jump up, try to go higher, come down, then it just works its way back down till it sees some value. So keeps getting it going, selling off, selling off, selling off till they see, okay, there's value right here. We'll start buying in again. And just that's ultimately what we're seeing here. So I'm of the belief we're going to see this fizzle out because it just seems like, multiple days. And if it continues to do this and work its way below the line, this will strengthen as a ceiling, even though it's trying to go above it. We're hitting the moving averages, pushing back down. We'll work our way back down this channel potentially. Maybe this continues to act as a floor right here at 98.45. Not certain, but that just seems to be what the price action is doing. So if that's the case, I'm looking at this as more of a better opportunity to lock now than hope for something better. Too often, the ultimate question I keep getting is, when are rates going to go down? When are they going to go down? Guys, the only time they went down was when money flooded the markets. And it has to do with emotional things that happen out there. And there's not going to be any consistent capital flowing into the market unless they start doing quantitative easing again. Now, there's argument that could be. I was on a podcast with Richard Duncan as a co-host, and we talked about that. He thinks that should be something that they do. I personally don't agree with that. I understand, appreciate his perspective. It makes sense from what he's saying and why he's saying it. I personally think that we need to just ride this out. People get used to the fact that this is the cost of money. Nobody makes money selling it at 2% and 3%. There's no value in it. All it does is drive prices up, and then you're paying for it one way or another. What's the amazing part about what's happened in the market when it comes to those low cost funds? People got that 2% and 3% interest rate, but they were willingly bidding up the house 100 to 150,000 higher than its value to drive prices up. Did you really do okay there? Did you really make out if you prepaid all that interest in price? It doesn't make sense to me, but that's the drive right now. A lot of people sit on the sidelines. So you as an individual, potentially sitting on the sidelines waiting for that, call me. Let me show you where the real value in real estate is. We've got a calculator that I'm working with. I'm not going to issue it quite yet, but the calculator that I'm looking at, that I'm using, that I'm playing with, I'm able to show folks, and I can show you individually, is that your average deal. I mean, I see things right now with, your cash on cash return, which is a metric everybody likes to play with, and everybody thinks is the metric they need to chase down, is 1% or 2%, something like that. Nothing extreme. Everybody like, that's a cash on cash return. Well, that's your first year, number one. But when you look at what's happened to the amortization over the 30-year window of the ownership of that property, somebody paying it off, and you look at the ability to see at least a minimum of 2.5% appreciation on the home, and then you're seeing the cash flow being able to be raised as you raise rents. I'm seeing the average person get 20% return on investment with 20% down. Period. I've got deals out there right now I'm working on, and call me. I've got some right now. Somebody had a medical issue. They got to get out of these deals, and they're willing to give a phenomenal deal to clients. So I've got 3 of those sitting there. If you're interested, call me. I'll connect you with it. Those ones can return way better than that. If you want to know how I come up with those numbers, reach out to me. Just connect with 602-291-3357. Again, 602-291-3357. Text me. We'll get you on the list. We'll get talking. I appreciate you guys. But there's a lot of deals out there. Unfortunately, we're looking at it from the wrong angle. We always have been, always are. I'm going to try and help you look at it from the right angle so that way you can capitalize when the rest of the world is waiting for something to happen that may never happen. Talk to you soon.